Hey, what's up guys? You obviously made it to this video. You just saw my life insurance ad. So you obviously know the importance of life insurance. Now, what I wanted to do is I wanted to make it a little bit easier for you to understand because the truth is life insurance can be a confusing aspect, a confusing purchase because there's so many different kinds. How much insurance do you actually need? So what I did is I'm going to go ahead and briefly explain the three different type of life insurances that exist, the three general type of life insurance policies that you can get. But then I'm also going to talk about how to figure out what your insurable need is. If you were to pass away today, what are the four main areas that are going to impact your family and how much do you need to leave behind? So I'm going to quickly get into the three different type of life insurances that exist right now. So the most basic form of life insurance is called term life insurance. Term life insurance, the great thing about it is that it's very affordable. So for a low cost, you usually get a high amount of death benefit. The negative is, though, some don't like that it does expire. So let me give you a quick scenario. Let's say you had a 35-year-old male and he wanted to protect his family for $500,000. He decided to go with a 30-year term. So that means from age 35 to age 65, he will have coverage. So if he passes away between ages 35 and 65, his family would receive $500,000. If he lives past age 65, the policy expires, the company goes their way, and he goes his way. So for some, like I said, that may be negative for some. For others, that's probably the time frame that they needed it. It all depends on your specific need. The second one we call ROP, and I'll explain what that means in a minute. So ROP typically costs 3 to 2 times as much as a term. And the ROP is still a version of a term policy. So let me give you a scenario. Let's say you had the 35-year-old male, and let's say he wanted to protect his family for the $500,000. And he also decided to go with a 30-year term. So from ages 35 to age 65, he has coverage. If he passes away between ages 35 and 65, his family, yes, would receive the $500,000. Now, this policy I mentioned earlier is typically 3 times as much as the term policy. And the reason why is if the client lives past age 65, there is a component where he gets a refund. And this is the benefit of the policy. And the policy is called return of premium. So which means that if he outlives the policy, he gets back every cent of money that he's put into the policy. So let's say that he was paying $100 a month. Every year, that would mean he was paying about $1,200. Over the course of 30 years, that $1,200 would have been $36,000. So if he passes away, family gets $500,000. If he outlives the policy, he gets a refund for $36,000. So the most basic form of life insurance you see is term. The great thing is it's the most affordable, but it does expire. ROP is the next version up. The great thing about it is still affordable. And the great thing about it is you get a refund if you outlive the policy. So that is the second form. I'm going to quickly go into the third form, which is a policy that a lot of people are now learning more about. And that one is called permanent. Now, I know under permanent that there's an umbrella of different policies. And I'm not going to get into all that today to confuse you. But I'll explain some basic things about permanent policy. The first one is it doesn't expire. You typically cover to age 121. You lock in the rates typically at a young age and it expires at 121. So you don't have to worry about you outliving your policy. The second and very powerful benefit is something called living benefits. So just like technology, life insurance has evolved over the course of the last 15-20 years. So you don't have to die anymore to benefit from your life insurance. So living benefits is a free feature for most companies. Not every company has it. I know a lot of the companies that I work with and that I represent do have it. What this means is if you get diagnosed with the critical, which is cancer, complications of diabetes, lupus, Crohn's, heart attack, stroke, anything severe, you get a chronic illness or terminal illness and you're going to die, you can advance 50 to 95% of your death benefit depending on the severity of your illness. So in the example I gave you before, the gentleman had $500,000 in life insurance. And let's say he didn't die, but he got hit with a critical illness. That means that he can advance, depending on the severity, anywhere from $250,000 up to $485,000 that he can advance as a lump sum, so he can pay bills, continue to make sure that the house stays afloat while he recovers from his injury. Very powerful feature that was recently added to life insurance for absolutely free. And the third benefit is cash value. So what does that mean? That means, imagine this being your life insurance policy. A portion of the money goes to the actual life insurance, and the remaining money above the cost of life insurance grows interest either in dividends, or it's basically interest mirroring the S&P 500, depending on the policy you go with. So those are the three different type of policies. You have term, the most basic form. It expires, and it is the most affordable. The second up, which is a return of premium, it also expires, but at the end of that expiration day, you do get your money back. And then, of course, you have permanent. Permanent provides coverage for the rest of your life, has the benefits if you get a critical, chronic, or terminal illness. And it does have a cash value component. And I forgot to mention, you do get to take out this money tax-free upon retirement, or if you need it for an emergency. So those are the three different type of insurances that exist. If you have any questions, if you are looking to figure out which one that you want to go with, feel free to reach out to us. And the last thing I'm going to show you is how to understand how much insurance you need, which is a basic, kind of a basic breakdown. So we call this your dime. The reason why this is important is a lot of times when you go to your local life insurance agent, they just tell you, hey, just pay this and you'll get this amount. But they never actually break down how much you need. So I'm going to show you guys real quickly how you can determine what your insurable need is. So DIME stands for four areas in which your family typically is impacted upon your death. So the first one you want to calculate is your debt. So you want to add up all your debt, especially if you're married, because if you guys both are on the credit card or both are on a loan, then your spouse is going to take that debt. So you want to make sure you add your debt. Your income. So income to me is if you have small children, figure out how many years of your income do you want to leave behind. So let's say that you're a father and you make $50K a year, and you say, you know what, I want to leave behind $50K a year for my baby, who is, let's say she's 5 years old, and I want to leave this till she's 18. So that's 13 years of your income that you want to leave behind. So you would take the $50,000 that you make times 13, and whatever that answer is what you're going to leave behind in case you pass away, so that your children or your spouse do not miss your income while you're gone. If you're a homeowner, you want to make sure that you calculate the mortgage. How much do you owe? And last but not least is education. Do you want to leave behind college education for your children? Once you add this up, the answer that comes out is your insurable need. So now your agent takes the insurable need and structures a policy based on your budget and based on if you want a term, permanent, or ROP, and they would structure a plan accordingly. So I hope this was helpful, showing you the different type of life insurances that exist, but also showing you how to properly understand how much you need to leave behind for your family. If you guys are looking for a free consultation, feel free to click the link below. We can schedule an appointment over the phone where I can sit down and I can break this down for you in detail. We have nationwide agents that are waiting on call to help fathers and mothers just like yourself figure out a plan to leave a good legacy for their children.